Welcome to the channel. I am James, and today we are looking at AMC Entertainment Holdings Inc., ticker symbol AMC. They have just released their earnings for the fourth quarter and full year of 2021, and I'm going to be going through them right now. So the market hasn't reacted too much right now. It's up 3.6%, up to almost $19, $18.98. I won't be going through full AMC history for the last year, but it's had a pretty crazy year. 52-week high of $72, 52-week low of $7.05, and is covering it around about almost $19, and up previously from its recent lows of around about $15 a share. So let's get straight into these earnings, but first can give a like on the video and subscribe if you're not already. Let's zoom in a little bit. So let's have a look at the fourth quarter summary. AMC's fourth quarter of 21, represented by its strongest quarterly results in 2 full years. Total revenues for the fourth quarter grew to 1,171 million compared to 162 million in the fourth quarter of 2020. Wow, well, that just shows the power of COVID right there. Net loss for the fourth quarter improved to 134 million, including non-cash impairments related to long-lived assets of 72 million, compared to a net loss of just shy of $1 billion in the same quarter a year ago. This company's been absolutely destroyed by COVID, but it looks like it is coming back strong, which included a non-cash impairment and related to long-lived assets, definite and indefinite lived tangible assets and goodwill of 466 million. Fourth quarter adjusted EBITDA improved to $500 million to 159 million compared to adjusted EBITDA loss of 327 million for fourth quarter of 2020. Net cash from operating activities for the fourth quarter was 46 million, and available liquidity in cash and cash equivalents was approximately just shy of 2 billion, 1.8 billion, and 1.5 million respectively. Normally I wouldn't read this, but this is quite an interesting thing here. As of December 31st, 2021, AMC has opened and operated almost 600 domestic theaters and 340 international theaters. This represents 100% and 95% of its domestic and international theaters respectively. Substantially all the company's theaters were open for the entirety of the fourth quarter. So that is a massive, massive move for AMC. And they, on some of the high points, a lot of more robust offerings for moviegoers. Obviously, Spider-Man No Way Home was released, and this was released at the height of Omicron, but still had a very, very good release. So let's scroll down and have a look at the key financials right now. We have the revenues here. This is the key ones. We have the quarter ended here, and we have the year ended on the side. So this is 2020 and 2021. As said before, 162 million, up almost 10 times that to 1.1 billion in 2021 compared to the year 2020, 1.2 billion to 2.5. So the quarter of 2021 almost beat the entire year of 2020, which just shows that this company is dramatically improving without all the COVID restrictions and sort of general consensus around COVID. There might be some things coming in the future that are a little bit worse, but right now movie theaters look like they're coming back to what they once were, which is excellent for the investors and Apes to hold this. Net loss on the previous quarter, almost $1 billion. That's down to 134 million, and on the year, 4.5 billion, down to 1.2. So that is a $3.3 billion increase. Coming positive very, very soon, I would say. Net cash used in operating activities. This will be part of free cash flow if it was provided by operating activities, but this is used in because it's negative. And we have minus 357 million, but a positive fourth quarter of 46 million. So that is up about 400 million and positive, which is good to see. Now, yet it is still not positive in the year ended 1.1 billion to 614, but it is trending in the right direction, which is what investors want to see. Earnings per share, $6.21 negative, now down to almost only $26 in the negative. $39.15 negative in 2020, down to minus 266. So this is improving rapidly. Let's have a look at some of the attendance metrics here. This is the attendance in thousands. 2020, 8 million. This is now 60 million, and that is a crazy increase, by the way. 75 million up to 128. US markets, let's just see, up 10 times on that and double in this market. International markets, see, not as strict as it was, 3.2 million up to 19, but up 30% from 28 to 37. Average screens up about 40%, and on the year up almost up almost 80%, 5 million to 9. So let's just scroll down and go through quickly everything here. Well, we've got the revenues. How is this broken down? Admissions, beverage, food and beverage, other theatres. We won't be talking about the full numbers, already gone through this. Majority obviously is the revenues. Admissions have almost doubled in the year, but look at this quarter difference, crazy again. Food and beverage, a large proportion of their money, almost half, and this has gone up almost 10x here and over doubled here, 326 million to 857. Other theatre, a much smaller revenue, but definitely still increasing, up about 100 million and up almost 100 million in the quarter as well. So increasing massively, overall 1.2 to 2.5 billion. If we look at the cost of revenues, unfortunately the costs are up, which is why the company is in negative at the minute. We look how this is breaking down. Film exhibition costs up massively, about doubled. Operating expenses, food and beverages costs here has doubled, 88 million to 137. Film exhibition costs also doubled, 322 to 607. Operating expenses up massively, 800 to 1.4. Rent is actually down slightly. General admin, merger and acquisitions, a lot of these are down, but you can see that the operating expenses are down massively, and this is because of this impaired long-term assets, infinite lived intangible assets and goodwill, 2.5 billion to 77 million. So this is also the net loss, as we said here, described before. So what are they doing in terms of shares? Well, shares are up massively. This is 2020 on the left, 117 million to 477. That is massively up. And normally we would be going through the cash flow statements and things like that, but because it is in the negative, we don't really talk about that right now. But the company is moving in the right direction. Let's see if the stock has changed. No, still only up about 2%, but still trending in the right direction, which is what the apes want to see. Let's just have a quick look at some technical analysis. I would do the moving averages, but these are going to show pretty bearish sentiments, to be honest, so there's no point in going through all of them. I'll just quickly show you the 50-day, and you can see the price is below the 50-day moving averages. If it can raise above there, it has not been above there since basically November, when it was at about $40 a share. So if it can get up there, that would be very good to see. But I think the technicals will be showing a strong sell. Let's have a look at the MACD. Pretty positive MACD actually overall. That is a surprise. You can see the signal line switch here very low, and they are creeping up to 0. If these get above 0, that would be a massive buy signal for AMC. And finally, let's have a look at the RSI, Relative Strength Index. Is the stock in overbought or oversold regions? Well, right now on the daily, it's pretty flat, down from the lowest it's been since, well, what? Even the bottom of the pandemic, and then again in in the back end of October. So never really been this low in February, but is currently trending in about in the middle. And if we look at the weekly, towards oversold, but it really hasn't been this low since October, November, not since the initial shoot up and all the other things that have happened with AMC. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.